If you're a high income earner, the tax code can be extremely advantageous for somebody in your position. However, there might be tax loopholes that your CPA hasn't informed you about yet, which could save you a considerable amount of money. And in this video, I'm going to unveil the number one tax loophole that any business owner can implement to reduce their tax bill. By taking control of your finances and harnessing this loophole, you can save money and increase your wealth. If you're new here, I'm Dr. Jeff Anzalone, a periodontist, not a tax expert, consult yours, that's on a mission to get you out of the rat race. Do me a favor and download the free passive income guide with the link below this video. All right, so let's get into the top tax loophole that we've all been waiting for, and that is the Augusta Rule. Now, the Augusta Rule, let's talk about where this came from. So the history of this tax loophole, commonly referred to as the Augusta Rule, actually dates back to the 1970s in Augusta, Georgia. During that time, the annual Masters golf tournament attracted visitors, and it still does, from all over the U.S., all over the world actually, prompting many local residents in Augusta, Georgia to rent out their homes to accommodate all these golf fans, okay? However, the income generated from these rentals was, guess what, taxable. And many homeowners face a lot of penalties. So to address this issue, the government introduced Section IRC 280A, which allowed homeowners to actually rent out their homes for up to 14 days per year without having to report the rental income on their individual tax returns. This provision also extended to business owners, providing them with a very valuable tax saving opportunity. So again, Section 280A is particularly beneficial for business owners because it enables you, business owner, practice owner, to rent out your home for up to 14 days without reporting the rental income. Also, you can claim a tax deduction for doing this too. This means that you can write off business events and meetings as business expenses while collecting the income tax free. All right, so let's take a look at this in action, real life scenario. All right, consider this. You're a small business owner, you're a practice owner, and you decide to basically, you want to have a 2-day strategic planning meeting, strategic planning retreat, whatever you want to call it, for your team at your house. Now, what you do is you research comparable properties in your area that maybe you want to hold this meeting at. So you take a look at these venues and you determine that a very reasonable rental rate for your home would be $2,000 a day. All right. So by renting your home to your business, by renting your home to your practice for this event, you will be able to collect a total of $4,000, right? $2,000 a day for 2 days. So you're able to collect $4,000 in rental income tax free. Additionally, your business could claim the $4,000 expense as a tax deduction. Now, this is just one example of how you can leverage the Augusta Rule to your advantage. All right. So again, to take advantage of this, you must follow specific steps and comply with IRS regulations. All right. Very good idea to get your CPA involved, even before you do this, to make sure that you do it correctly instead of doing it and then trying to go back and redo it. Okay. So really there's 5 crucial steps. The first one is finding comparables. So again, you need to determine a reasonable rental rate for your home by researching the comparable properties in your area. This could involve going online, probably the easiest thing to do, go online and search, or call some of the venues in your area to establish a reasonable scale for your rental fee. Number 2 is you want to make sure you take minutes during the meeting. So you want to document get one of your team members to do it. That's their job. You want to document the purpose and the content of these meetings that are going to be held in your home. This is going to validate the expense just in case you get audited by our good friends at the IRS. Number 3, create an actual physical invoice. Okay, so generate an invoice for your business, for your practice, specifying the changes and reflecting the amounts indicated by your comparable search. Now, this invoice, it should be from you. You're the property owner, right? So this should be from you and paid by your business. All right. Invoice from you, the property owner, and paid by your business. Number 4, pay the expense. So now you want to pay the rental fee from your business to yourself, preferably using a check to create a paper trail that's going to demonstrate the legitimacy of this transaction. And last but not least, step number 5, you want to issue a 1099 to yourself. So at the end of the year, simply issue, get your accountant to help you with this, issue a 1099 to yourself, if you're an LLC owner, to ensure that you've taken every step to claim this tax deduction correctly. All right. So again, the Augusta Rule is one of the most significant tax loopholes available to small business owners, yet there's so many CPAs out there that don't even inform you about it. So you want to make sure that you really get your CPA involved before implementing any of these tax strategies we're talking about. I'm not a tax expert. Don't take this as tax advice, but you want to make sure you consult with yours. Now, speaking of taxes, if you really want to know how to avoid taxes altogether, then check out this video.